Hello everyone, this is Ross with Market Traders Daily, and this is today's video analysis for May 21st, 2020. Today we're looking at the USDJPY, the US dollar, versus Japanese yen for today's trade analysis. A couple of things that we're going to look at today is the direction we should be trading. Direction is important, where to make a trading entry, and when to make a trading entry. So we have the US yen on the left-hand side, US dollar futures index on the right-hand side. We can see that the dollar has been bouncing around inside of a range on the right-hand side. That black box that you can see on the right-hand side, the blue and the red trend lines really give a sense of the fact that it's just been bouncing around in there for the past couple of months. Zoom it in on that a little bit, and there's that black box. But take a look at what's happening. We have a pretty clear this week downtrend along that black trend line. We've gotten under the green shaded area, 99, 20, 30, and have room to go to reach to the yellow shaded area, 98, 95, 98, 85. That's historically accurate. If you look back here to the left-hand side, that's what the last two downtrends did. They broke underneath the green zone and went to the yellow zone. So there's room to go, and I think that gives us an opportunity to be short on US dollar pairs. The worst case scenario turns right back around and goes back up. So we're focusing in direction-wise on being short. So we bring that over to the US yen. If we're going to be short on the US yen, we want to do that as close as possible to resistance. You bring in this blue shaded area on the left hand side, 107.75, 107.95, and you see the past 2 days, now the third day, finding resistance here at the blue zone. If the buyers fail to break through that blue zone because of a falling dollar, then we could be looking for this back down to 107.40.25, the orange zone, or even a resumption of the previous downtrend that's on the left-hand side. Fibonacci, top to bottom on the left-hand side, puts the 50% retracement level right at 107.68, which is basically the bottom of our blue zone. So for the day today, we're looking at this blue zone as our decision point. Either it's going to bounce off of that, turn back around, and go back down with the falling dollar, or the worst case scenario, it breaks through that blue shaded area. One other thing that I would say about that is I'd be very hesitant to buy the US yen under that blue zone, because since going all the way back here a couple of days ago, since the 15th, we found resistance underneath 107.75.95. So the place or the where we're going to make our trading decision will be the blue zone. Either we're going to sell it from here and go back to the orange zone or lower, or we're going to look for the breakout above for a buy. And of course, then we'd probably want to see the US dollar go up as well. So we determined direction on the right hand side with the dollar, where with the blue shaded area on the left hand side on the US yen. Then that just leaves the last question: when do we make that trade entry? So that's when I'm bringing in the volume indicator on the right hand side, and knowing that right now we see it from the blue zone, we can see the volume indicator rolling over to a bearish stance. We have the trend dots up here changing over from green, white, then to red. The heat map went from green to red. The volume is red. So that gives us the reason when to get into the market. Now, that's no guarantee it's going to continue to go down, but it shows short-term volume turning lower from the blue zone in the direction of our dollar trend, which is short for the US yen. And of course, the orange zone sitting down here, 107.40, becomes your first target. And if I squeeze this chart on the right hand side, you can see it sitting down there. Plenty of room to go. And again, the worst case scenario at this point is our stop loss is going to go above that blue zone. So we're going to place that, and let me see if I could change that to a color we can see here. That red line. So you would place your stop loss above. It doesn't have to be that high, but I'm saying that that would be our worst case scenario. On the left hand side, that means it needs to be above the blue zone, maybe close to the 108 level, 108.05, somewhere in that neighborhood. That way, worst case scenario, it breaks the blue zone and goes higher. But if we can see it fall from the 107.75 down to 107.40, pretty decent profit for the day on the US yen.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.